Swiss chocolate, Italian fashion, French wine and German cars. This is how Europe marketed its products. With cars, you had to agree. Europeans had the best automotive technology, especially the Germans. But now the European car industry is facing decline. Look at the shares of top car makers. Volkswagen is more than 20% down this year. BMW is nearly 30% down. Porche is 16% down. Mercedes-Benz is 11% down. And Stellantis is 36% down. These companies once dominated the car market. So what happened to them? Just look at BMW. They have cut their profit forecast for this year from 10 to 7%. As a result, their shares plunged more than 11% on Tuesday, the biggest single-day drop since the pandemic. So clearly something is wrong. Experts talk about two main reasons. Number one, the fall in demand, and number two, the failed electric vehicle bet. Let's look at both these factors. 4 countries make up a big chunk of car sales in Europe: France, Spain, Italy, Germany. Last month, sales dropped 16% in these countries, 16% less sales compared to last year. And why is that? Well, the economic outlook is not encouraging. Germany had a technical recession last year in 2023. Interest rates are still high and inflation remains a sticky problem. So buying a car is too much of a risk at this point. And this trend goes beyond Europe. Even in India, car sales are down. Indian dealers have 780,000 unsold vehicles in stock. So the problem is global, which brings us to the second reason. The EV bet has not worked. You see, EV or electric vehicles cost more than combustion engines. The running cost is less, but the initial buying cost is way more. So customers will look for the best deal. Enter Chinese EV makers. A BYD car, BYD is a Chinese company, a BYD car costs less than 38,000 euros. A Volkswagen EV costs about 46,000 euros, and the BYD comes with more features and trendy looks. So which one would you buy? Obviously, the Chinese one. Thus, European car makers are losing out in the EV market. Stellantis made up 4% of EV sales in 2022. They're down to 2.7%. Volkswagen Group was at 7.5% in 2023. They're now down to a little over 6.5%. Mercedes has fallen from 2.5% to 1.9%. As a result, some of these companies are cutting costs, like Volkswagen. They're thinking about closing a factory in Germany. Imagine that, a Volkswagen factory shutting down in Germany. The question is, can they reverse their fortunes? Well, Europe is doing two things. One, they're delaying their EV goals. A lot of European car makers promised to phase out combustion engines by 2030, but now they're saying that's not possible. Volvo, Volkswagen, Mercedes, all of them are delaying their target, meaning they will keep selling more combustion engine cars and hybrids. That's the first thing. Secondly, they're rethinking their China strategy. The European Union had planned to impose tariffs on Chinese EVs, but European car makers are not thrilled. Why? Because China may respond with a tit for tat. Beijing can easily slap tariffs on European cars, which will hurt the likes of Volkswagen. European brands make up 20% of China's auto market. So they're keen to protect it. We saw similar statements and sentiments from the Spanish government. First, they supported the tariffs. Now they say, let's rethink. But tariffs or no tariffs, European car makers face a bigger challenge, the challenge of being outdated. The same thing happened to American car makers. They once dominated the auto market, but today America's car belt is a ghost region. They simply couldn't keep up with the new trends and innovations. Europe is now facing the same problem. Yes, their cars are known as status symbols, and yes, the quality is still top-notch, but they're not futuristic, not like a Tesla or a BYD. So European car makers need an ideological revamp. If not, the era of their dominance could be ending.